Okay, welcome back everyone to another Wednesday session with Octa FX. Just a quick audio check and then we can get started. Okay, audio seems to be good on my side. Welcome back everyone. Just a quick general advice and risk warning disclaimer before we begin. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. Right, audio seems to be good. Everything seems to be good. Looks like it's a quiet night today. Let me get my chart out. Okay, so either you have a running position or we are all out of our positions right now, but that seems to be the case. So let's take a look at pound USD. This is probably what a lot of people are going to be looking at or have been looking at. So we've got a new UK Prime Minister, right, which is the ideal candidate right now. And as I mentioned on the Monday session, we're likely going to see a little bit of support going in for sterling. There are a few things to be updated on what's going on though. The expectation of the new fiscal policy was supposed to be on the 31st of October. This one has been pushed back to 3rd of November by the now Prime Minister of the United Kingdom, Rishi Sunak, right? So yeah, just to give it a little bit more time for them to finalize what's really going on. So now the market expectation for Bank of England is to hike by 100 basis points. That seems to go up a little bit higher. So we're looking at a range between 75 and 100 basis points from Bank of England in the upcoming meetings. Anyway, so we are looking at a little bit of a risk rally right now in pound USD. So I did mention a little bit that we might see a potential return towards that 1.650, 1.17 range, which is very close to point A, which we still have the ABC, but we're not looking for that point D anymore. So it kind of ends with ABC at this point in time until we see a clear rejection from 1.17, if that happens. Right now, it is very thin in terms of the Ichimoku cloud. So given this week, this could actually easily transition beyond that Ichimoku cloud. So really depends on what's going on this week. If we do have that sustained close above 1.14, maintaining a position close to 1.16, 1.15, then yeah, we could see the pound USD actually transition above the Ichimoku cloud. This would be the first time for the year ever since we transitioned below the Ichimoku cloud on the 24th of February 2022. This would actually be the first transition, so we'll see what happens here if it does transition. So there are questions. Should you be looking for an intraday short on the pound USD or on the Euro USD, you know, because there's a potential for a class A bearish divergence? It's going to be a little bit risky, and my message is pretty clear. If you don't have a position this week, you know, try not to build one. It's better off waiting for next week to be done rather than rushing to things. If you are into swing trading or position trading, if you are in for intraday trading, then you know you could be looking at a potential correction on the pound USD. This one's a little bit overextended. Okay. So on the hourly time frame, we are a little bit overextended in terms of that fib that we could project. This is now up to 200%. So yeah, do we expect a potential intraday resistance? There could be an intraday resistance at 1.16. But again, The overall tone on the pound USD is that this could actually potentially transition across the Ichimoku cloud. Tenkan is up, Kijun is pointing up, everything is looking okay. So yeah, we could potentially be at the turning point in the market here. Are we going to transition across the Ichimoku cloud or not? That's going to be the question. But even if it does transition, we could still see a little bit of potential sell-off on the pound USD in terms of an intraday scale. This is probably due more on the technical correction rather than anything else. So if you're looking for a potential short on the pound USD, I think it's reasonable. We are looking at the cross with on the stochastics right now, but that really depends. We just started the hour. So if we see price continuing below 1.1550, then yeah, there could be a potential short below 1.1550. Let me just add this in here. 1.1550. If it does close below 1.1550, then you could potentially have your stop losses. It is a little bit wide. The closest stop loss that you could have is probably at 1.1625. That's kind of the minimum risk available. So think about it. This might not be up to everyone's cup of tea. All right, in terms of a potential correction, we are potentially looking at another retest of 1.14. That's pretty extended. I wouldn't be aiming for 1.14. I would be looking at about 1.1450. That gives a risk to reward ratio of, it's not even 1 to 1.5. Oh, sorry, it's not even 1 and 1.5. We're looking at the potential 100 pips to the downside, 75 pips of risk. So yeah, if you're looking for an intraday position, you could do this, or if you're patient enough, and someone's already asking if I'm going to take that short position on the pound USD. You guys know that I don't trade against the current trend on the hourly time frame. In terms of the daily time frame, we're still in a downtrend. Look, we are starting to see price creating a higher high. So if you're not seeing that yet, I'll actually draw it in for you. So think about it. Let me get that. No, I'll actually just use this one. Right, so we have this, and price is now beyond point C. So we are looking at a little bit of a transition here to the upside. Not saying that it's actually going to reverse, not saying that it's actually going to start an uptrend yet. We will need to see the pound USD transition above the Ichimoku cloud. And we also need to see how strong 1.14 is as a support before we potentially say, yeah, you know what, it's time for a potential reversal on the pound USD. Right now, it's not quite there yet. So this week and next week hinges a lot on whatever the new fiscal policy is going to be. A good thing is the UK finance minister stays the same. So Hun remains in the job. That's going to bring in a little bit more stability. The new prime minister is focusing on financial stability and economic stability in the UK. So I think that's a great thing. So yeah, we're seeing a little bit of a boost here in the sterling. We are looking at a little bit of a stability going forward, but it's, from a technical standpoint, is it time for it to create a new trend? It's not quite there yet. Okay, so don't rush into things. If there's a break above 1.1750, above point A, then yeah, there's a good chance we are looking at a potential uptrend on the pound USD. But until that happens, we're still within that resistance area here. Taking a look at price here, we're not even at we're not even at 127.2, so we're not even at 1.1650. That's going to be a resistance too on the weekly pivot as well. So yeah, if you are looking for that short, just keep in mind we technically still have a higher resistance at 1.1650. So if you're aiming for an intraday trade on pound USD, it could be a little bit premature. So think about it. All right. I don't think it's worth the risk, but hey, if you need to trade for the day, if you're looking for a trade for the day, then yeah, there could be that trade. If you're thinking, you know what, I don't really want to go against the trend, I'm looking for a long position on the pound USD. It's a little bit too late for a long position. You technically would need for a potential bounce at least around 1.15 if you're looking for a buy. You could be looking at that. Let me just silent my mobile. There we go. Right. So yeah, either you're looking at a long position there. If it doesn't create a new low, then that would be it. You know, you could be aiming for that 1.1650. If there's a little bit of a pullback and you prefer to stay within the trend, at least on the hourly time frame, then that would be the case. All right. On the daily, although it remains below the Ishimoku cloud, there are signs that the pressure to the downside is actually slowing down a little bit. And that's the main reason why I'm not too keen on looking for a short position on the pound USD. It's a little bit too premature right now if you're thinking of a short. If you're thinking of a long position, then you would need to wait for that pullback. If you're looking for a position trade, that's unlikely to happen until that fiscal policy happens on the 3rd of November, which is going to be next week. Okay, so think about it. This one here, 1.16, if you are keeping an eye out on the pound USD or you have a running position on the pound USD, you're thinking of an exit, I think right around now would be a great level to get out if you want it. If you want to stay in the trade, then at least move your stop losses up, maybe to 1.1450, or if you have it higher, then move it at 1.15. Then you can just let it trail. There is going to be another resistance above that 1.16 level. It will be at 1.1650. Okay, pretty simple. All right, we've got the ECB tomorrow, by the way. So yeah, we did talk about this on Monday's session as well. We were looking at a potential break out of that triangle. We did break to the upside, which is not my preferred scenario. Either way, there's going to be a time limit. It has to break this week, but it broke out earlier. I was expecting, you know, a breakout will happen when the ECB thing tomorrow goes on, when the ECB is expected to hike by 75 basis points. I was thinking that would be the point of a breakout. We don't see that. We actually had that breakout yesterday. Anyway, this one is up above parity at this point in time. So in terms of support levels, if you have that swing position that we have been trailing for months, you know, the last bit of the position that I have is pretty much out at parity on the Euro USD, and Pound USD I'm pretty much out at 1.15. All right, so I don't have any more running positions on the Euro USD, Pound USD, or the Dollar Yen. All out, all done. So yeah, this one, you know, it's not the ideal scenario. I was expecting for price to actually break to the downside, but anyway, this is the current scenario. It is up at the Ishimoku cloud. This will bring it to about the same position as the Pound USD. If it does stay around 99.50 and parity, it could potentially transition across the Ishimoku cloud, so it will actually just go flat. And by next week, it will be above the Ishimoku cloud. And then we'll all have new support pretty much at 99, 98.50. Those previous resistances are going to turn into support. In terms of momentum to the upside, it is picking up. So we're no longer in a sideways market condition for the Euro USD or the Pound USD. So the momentum actually broke off, and we are starting to see a new momentum being pushed out higher here. So again, really depends. From a technical perspective, I'm not going to be, you know, expecting ECB to do anything much on the Euro USD here. I would really prefer to wait for price to actually just transition out of the Ishimoku cloud at this point in time. It's just a few days wait. I think it's going to be worth it. Less headaches, a little bit more confirmation going forward. So yeah. On that's the front on the Euro USD, at least on the daily time frame. So, and what's going on with the Hourly time frame, we do have a little bit of resistance. Again, I think Albert was picking this up in the stochastics. If it's going to be tough calling this a Class A bearish divergence. We don't have a full cycle, number one. In terms of price, yeah, we might see that divergence, but we might not see a huge correction to the downside because we are pretty much at parity right now for the Euro USD. So it could pivot at parity, meaning if you take a look at the intraday range, it would actually be staying around 99.50, 99.40, 99.30 as a potential support there. So think about it. I would pretty much pick 99.50 as your intraday support. We're pretty much at pivot right now for the Euro USD intraday wise. We have that parity level as a pivot, as a resistance. We've got that 1.0050. In terms of support, we got 99.50. So think about it. That's going to be about 100 pips of range. And that's going to be that. So if you want to trade the Euro USD, trade within the range. If you are more of a trend following traders, then you want to wait for a break above 1.0050. So preference, again, it all boils down to preference. So either you like trading within the range, right? Then you could be looking at parity as your potential exit level, or potentially even at 99.50 if you're thinking of going short on the Euro USD, or you wait for a break above 1.0050. Right? So you got two options. I think it's a little bit too early to jump in for a short. Not too confident on this. But yeah, first target would be at parity. Risk reward ratio is not going to be great. You're risking 40 pips for a potential 15. Not too keen on that. If you go for that 99.50, it's all right. But in terms of that pullback, are we going to be looking at a pullback towards 99.50? That's the thing, right? Pivot. It's going to be at parity. So just revolve around parity for the Euro USD here. If you're looking for more of a breakout scenario and you say, you know what, I don't like going against the current market trend, then yeah, wait for that long position. If there is a break above that 1.0050, if there's no new low, then you could have your stop loss maybe at around 1.008 or maybe at parity. Right, in terms of target level, you could be potentially looking at a return towards 1.01, but that would really hinge on the daily itself. So as I said pretty much on Monday, it's going to be a tough week if you're looking for a new position. If we take a look at the movement the past few days, especially on the dollar yen, right? And let me zoom out a little bit on the dollar yen on the daily. All right. So we're seeing this one move down a little bit, but if I zoom out, it's actually really, really flat for here. Let me just show it to you. Before we had that breakout, the market was pretty much flat. Monday to Tuesday, before we see that breakout, about 35 hours, it was really, really flat. Range of just below 100 pips. So yeah, dollar yen right now, we're looking for a little bit of a pullback to the downside. In terms of technical levels, 145, 143 still remains as support for the dollar yen. We saw that, even with the Japanese MOF intervention on Friday, which they haven't acknowledged. And I don't know if they actually seek approval from G7. But Janet Yellen says that she didn't know anything about that potential intervention, so we'll see what happens. Anyway, even with that intervention, we haven't touched down to 145, 143, so technically we are still okay. The trend pretty much is unchanged, and looking at the speed of the stochastics falling down, we could be in for a potential continuation to the upside for the dollar yen. It's just that it's not quite time yet. We're not quite done on the daily time frame, so let's bring out the pivot. right? We might see price moving closer towards 145, but I think 143 is definitely going to be a stronger support for the dollar yen. If you're thinking of jumping back into the dollar yen, I would say if there's a bounce at 145, if there's a bounce at 144, 143, those three levels, those are ideal levels if there's going to be a bounce off that. So basically we need to see stochastics turn around, and if it does turn around and price picks up and doesn't close below that 143 level, still good for a potential long, and that would be the time when I would actually jump back in long on the dollar yen. Do I expect further weakness on the Japanese yen? Yes, because on that monetary policy, we are going to have that Bank of Japan monetary policy this week, and it's actually going to be the first time that the press conference is going to be streamed live. It will be in Japanese only though, so yeah. Anyway, we don't know what the market is going to react to, but we have that Bank of Japan monetary policy meetings pretty much on Friday. From how things are going, they are likely going to be keeping their monetary policy super, super easy. They just intervene in they just bought some bonds today earlier. That picks up, that caps off the JGB yield a little bit, but right now, if they're still doing that, then I don't expect anything much from the Bank of Japan this month. Are they going to be looking at potential interest rate hikes? There are rumors going around that they might start increasing interest rates. That might happen, late 2023. It's still about a year away. And in terms of what's going to be the key trigger for them hiking interest rates, it will be number one, inflation, but number two, it's not going to be the Japanese yen. It's not how weak the Japanese yen is, but whether or not wages in Japan picks up. And that's going to be the key trigger for Bank of Japan to actually shift their monetary policy. Also, I think they're saying late 2023, they are basically expecting that change to happen with the new Bank of Japan governor. Kuroda is going... Pretty much this term is going to end in April, so there will be a new governor for Bank of Japan next year, and that will be the turning point. But until that happens, do I expect further weakness on the Japanese yen itself? I think so. And if there's a pullback towards 145, 143, and it's well supported, that's going to give out a lot of room, because when that happens, then there's a lot more room to trade with a smaller risk if it does bounce off. You could be risking 200 for a potential 500 back towards 150 and potentially even higher. So yeah, I like that trade scenario, but it's just not time yet. So whatever it is doing right now, let the US dollar retrace, let the market corrects. So that's the thing with the majors. With Australia, this one here is a little bit stronger. We've got the year-on-year CPI number for Australia coming in at 7.3%. Previous quarter was at 6.1%. The expected result was actually at 7%. So we are looking at a pretty high inflation for Australia, and the RBA was hiking rates by 25 basis points instead of 50. So what's likely going to happen with the RBA is if they're going to maintain 25 basis points hike, then they're likely going to maintain 25, but at a higher frequency pretty much every month, or they could go back to 50 basis points. So we are looking at that break above 64 cents, which the pair has basically been traded in. Pretty much from the 13th of October until yesterday. We just had this break today back on that CPI numbers from Australia. So are we looking at potential run to the upside? Unfortunately, this is not going to be trending yet, because this is going to be pretty much capped at 65.25 as per outlook. If there's a break above 64, it's not going to be a quick run to the upside for the Australian dollar. It's likely going to still be capped by a few resistances, especially on the September high for the AUD. All right. let me go through the questions. I've been yapping around for about half an hour. Okay, gold. Yeah, we'll take a look at gold once we clear off some of the yen crosses. Sir, if sterling yen tomorrow price comes close above 170, will it push the movement to 174, 175? Let me take a look at the sterling yen. Okay. Will it push it to 174, 175? I think we are going to be looking at a potential resistance at around 173. If it does push to the upside, is there room for it to go? Yes, there's going to be room for it. It's going to be up to 127.2, and beyond that, 175 might be in between. I'm not looking at 180 at this point in time. It's going to be a bit far-fetched. This will really hinge on the sterling itself. So yeah, if we saw that gain on pound USD, then we could potentially see that gain on the sterling yen. Do keep in mind though, with the yen crosses, don't forget the Japan's MOF could be intervening, stealth intervention, right? It's not going to be in huge quantity, but they could do it more frequently without any notification. So think about it. We have that artificial cap pretty much at 150. If they're going to be looking at that as a cap, then yeah, I mean, sure thing. There's going to be a lot more room for sterling yen, but at this point in time, I'm not going to be looking at 174, 175. I'm probably looking at 173. So that could be your first target. That would be your 127.2% on the daily for the sterling yen. So yeah, if it does close above 170, definitely. Is your USD daily forming ascending wedge to go down? Technically, you would not be able to see a wedge within a downtrend, so no. So yeah. If the market is in an uptrend and you see a wedge, then yes. But right now we are on the daily. It's still in a downtrend, so technically we should not be looking at a wedge. There could never be an ascending wedge in a downtrend. So yeah. A wedge would appear pretty much at the very end of a trend. So if we see a wedge that goes up, then the market has to be in an uptrend. So let me just draw this. If you're looking at the market that goes up, and then you see this, then that's when I expect the market to go down. But that has to happen in an uptrend. Technically cannot happen in a downtrend. So yeah. So get your bearings right, get your patterns right. All right, central bank starts buying bond. It will make their currency stronger. And if they sell it or cut it, it will weaken their currency. It's actually the other way around. If they start buying bonds, the yield, if they start buying bond, the yield's going to go down. That's basically what Bank of Japan is doing. They don't want that yield to go up. So this is really weird, right? Because if you think about it, if you want the Japanese yen to stay strong, you would actually let that yield run to the upside. Now, the reason Bank of Japan is doing the opposite, and it's not really helping the Japanese yen right now, partly it's because if the yield goes too high up, inflation could go up as well, and Japan doesn't want that to happen, especially right now when they're reopening their borders right now. So today, does the government wants the Japanese yen to remain weak? They want the Japanese yen to be weak. They just don't want the Japanese yen to be uncontrollably weak, right? That's pretty much it. But if governments are buying bonds, it would actually drive the yield down. That would actually drive the currency down. Think about it. So yeah, it's not going to be correlating immediately. In different situation, like how the emergency bond buying from the Bank of England earlier this month, that wasn't there to actually help the pound. It was actually there to help the retirement funds. So the side effect of that is that the market see Bank of England helping the bond market out. They don't want financial instability. They don't want to see a fallout. That's why you see that pickup in the sterling. It's not really Bank of England trying to buy bonds to bring sterling back up. That's not the case with the bond market and the FX market. It's not as simple as that. Okay, so depending on the situation, it will do different things, and depending on the interest rate level as well, it does different things, right? Think about it. By buying bonds, Bank of England was basically contradicting what they're doing by hiking interest rate. So think about it. There are going to be differences in terms of use case scenario. It's not going to be as simple as buy bond, a currency gets weaker, sell bond, a currency gets stronger. That's not the case with bonds and the FX market. How can we find pivots indicator? Depending on what chart you're using, with MetaTrader, that's going to be a custom indicator. I don't think that's a built-in pivot indicator. So that's one of the reasons why I don't use pivots on the MT4 and MT5 is that we need to get a custom indicator. We basically need to download a third-party indicator. Is everyone going to be looking at the same thing? Is the calculation going to be all right? Is it going to be off? I don't want to take a chance. So if you're using TradingView and you want to know what the pivot is, it will be called pivot points standard on TradingView. All right. Can I take a look at the dollar index? Yes, I will take a look at the dollar index pretty much right now because we need to talk about the dollar index as well. Just give me 1 second, let me bring it up. Right. Here we are on the daily for the dollar index. We are at critical level, which is at 111. The next support is going to be 110. But beyond that, really, literally right now, if we do break below 111, we are potentially going to be looking at towards 110. If it does break below 110, then, I'm not going to be looking at 109. We could potentially drop down straight to 108 on the dollar index. So this is pretty much on critical level, right? If it does break below that 78.6% retracement, so I expect a little bit of support coming in at about 110, yes. But beyond 110, in terms of potential support, this would be it. Then we could see that, and price could actually do this. So, like the Euro USD and the Pound USD, and the reason why I pretty much prefer to be sidelined for the next 2 weeks, I want the market to actually be stable enough. We are pretty much borderlining right now with the dollar index here. If we take out the pivots right now for the dollar index, we take a look at how many days it ends. It's actually going to start if market doesn't go anywhere, right? If market does this, and by Monday it will actually be within the Ichimoku cloud, then that's where we might see this happen. So yeah, think about it. Do I see potential weakness on the dollar index? It depends. Really depends. Wouldn't want to put it out right now because things could change tomorrow on the back of the ECB. Right now, people are kind of expecting the FOMC to be slowing down their interest rate hike. But I'll be blunt right now. I think we are still looking at 75 basis points for November. That pace slowdown is going to be for December. But really depends on the numbers here. We do have, confidence, consumer confidence in the US dropped down last night. We've got housing market that's kind of slowing down as well in the US. But from a technical standpoint on the dollar index, it's a little bit too early to call this done. Are we at the border for a potential retracement? Yes, we are pretty much at 78.6, which is kind of the limit. Ichimoku wise, I don't see anything else. Number one, Tenkan hasn't crossed below Kijun. So Tenkan is still up there. Kijun is still flat at 112. So we haven't seen that cross happen. If that cross happened, price would be within the Ichimoku cloud. That would change things up a little bit. But right now on the dollar index, it's holding steady at 111 as a support for the dollar index. By the way, I don't think you guys can trade the dollar index, but this is more of a reference point. Are we going to be looking at a weaker US dollar at this point in time? It is slightly weaker in terms of whether it's doing the correction. It has done 78.6%. Is it normal? It's not really normal. Are we seeing the US strength fading a little bit? Yes. Right, and that's the reason why with the pound USD and the euro USD, I would say hang on a little bit, because we might be at that pivot level where we might actually see the US dollar reverse, but we're not there. We're not quite there yet. Okay, so it really hinges on the next 2 weeks on a lot of things. There's going to be a new position adjustments coming in November. People are going to be preparing for winter. People are going to be preparing their positions for December. Either they get out or stay in their positions. Commodity traders like me, looking at oil. We are going to be looking at a position for oil pretty much mid-November towards the end of November. So there's going to be a lot of adjustments towards year end. By the way, don't forget, comes November, that's going to be Thanksgiving. And then after that, it's pretty much holiday mood for the market. So, is the market getting quiet right now? It is getting a little bit quiet in terms of we're losing a little bit of a momentum here on the US dollar, on the dollar index. Yes. We at the pivot point? Are we at the turning point? With that, I don't know. Okay, because if we take a look at the weekly on the dollar index here, we are going to close below the Tenkan if we close like this for the week. Right, for the daily, if we close like this for the week, then the Tenkan will actually cross down below Kijun. Then that would be a key thing to watch out for, because we could be in for a deeper correction like the one in June. Take a look at the movement in June in terms of correction level in June. It does reach 78.6% as well, and then bounces off. So we are looking at similar situations. Comparing it to about June, July, we are looking at that situation right now. Do we see divergences forming in the market? Unfortunately, there's not going to be any divergence, so not really a clear sign. If the dollar index is going to continue to move to the downside, we are at that borderline right now for the week, actually. So, yeah. We'll see what happens. Right now, we do see a little bit of support still there at 111. Stochastics wise, it is going to be a little bit flat unless price breaks down below 40 on the stochastics. Then yes, we might see a little bit of a sell-off on the US dollar here. So we took a look at sterling dollar index, dollar cat daily. Dollar cat daily SP support at 1.35, and then divergence on the hourly. Should you consider a long? There are actually no divergence on the hourly. We don't have a divergence on the hourly. So all good. This one is all good. All good. All good. I can clear this off. Actually, I'll just leave it. There's no divergence on the hourly for the dollar CAD. Should you be going long right now for the dollar Canadian? Basing it on the daily, if you take a look at the daily as your trend, we got support 1, we've got 1.1, we got 1.35 as your support level. If you're thinking of going long right now, a little bit too premature. So take a look at the, this is probably going to be a little bit of a continuation with the Tenkan and Kijun Sen on Friday. We didn't really touch base on this one. Take a look at this one here. We've got Tenkan that goes down and Kijun that goes up. All right. It's not very often we see this kind of situation. Right now, the market is severely overbought, right? So the Kijun is rising up, but we still have support. Price is technically below Kijun and Tenkan Sen, so do we expect price to pull back down towards the Ichimoku cloud in the near future? Yes. In terms of support, what do we see? We do have 1.35. We still have stochastics going to the downside. So if you're thinking of going long on the dollar CAD, basing it on the daily time frame as a trend, it's not a great idea. If you base it on the hourly time frame to start going long, it's going to be a limited run to the upside, right? Because you're probably going to be limited towards maybe 1.36, 1.3625. If you're thinking of maybe jumping in intraday long, you could, but limited range. So yeah. We'll probably just be aiming for 1.3610. That's kind of the best case scenario. Risk reward ratio is not going to be 1-to-1 if you jump in right now. If you're aiming for that 127.2%, that's a little bit too far-fetched because we do have a strong resistance record on there. So I would limit your expectation a little bit. Maybe we look at 1.3625. That would be your potential target if you're thinking of going long dollar Canadian. But as I said, with the Euro USD, Pound USD, dollar Canadian, whatever, it's a little bit too early. It's a little bit too hasty if you are thinking of jumping in on a swing position. So don't think daily and then jump onto the hourly time frame. If you want to trade based on the hourly time frame, that's still okay. I thought it would be much simpler, like increasing rate. No. Can you check on silver? Yep, let's go to gold and silver. I think a lot of people are waiting for gold and silver. I haven't looked at silver for a really long time, but we will take a look at that. Right, so gold. Let me zoom in a little bit. So right now, in terms of whether or not it actually breaks above key resistances, we're not quite there yet. Okay, so in terms of resistance that we're looking at around 1660, we don't have a daily close above 1660 yet. In terms of momentum, yes, it's coming off the 20 level. Slow stochastic still below 20 though. It's at 1996. But if it does pick up and price continues to trade above 1660, are we going to be looking at a potential move higher? Yes, but it's going to be limited. We have resistance at 1675 and then 1695. But those are going to be your two key levels. Am I going to be looking for a buy on gold? No. Still not going to be looking for a buy on gold. I would just treat it as a little bit of a correction to the upside. Let me just remind you what happens with gold. Anytime it pulls back to the upside, the drop to the downside is a little bit more significant. So we're still looking at that momentum with gold here. But again, really pivots on... Sorry, it doesn't pivot on the US dollar weakness right now in terms of gold. Don't think that the Euro USD and the Pound USD could potentially, switch trend for a little bit. All right, we could expect dollar index to go down a little bit. Do we expect gold to run up with Euro USD and the Pound USD? No, that's not going to be the case. This is still going to be capped by what the FOMC is going to be doing, which is hiking interest rate. That's the correlation. And number two, in terms of risk assets, this is not pretty. Run to safe haven right now. Everyone's just going to run to US dollar instead of gold, right? As FOMC hikes, the cost of keeping gold goes up with it, and that's where gold is not attractive. So, with all that thing, with the Euro USD, the Pound USD, and the dollar index, and the dollar yen, dollar CAD, whatever, am I looking at a similar scenario with gold here? No, I still expect gold to be weak. I still expect resistances to come in at 1675, limited by 1695. Is it going to go up to 1695? Kind of doubt it, but we'll see what happens here. Momentum is picking up, but again, momentum is not going to reflect price. So I would say don't even look at momentum at this point in time for gold, because you might get weird ideas. Hey, momentum crosses up, maybe I should be going long on gold. I would still say, what? I would prefer for price to go up all the way to 1695 and fail. And I would prefer to be up there looking for a short position on gold rather than picking it up right now. It just gives me a much better risk reward ratio. So yeah, that's my view on gold. Pretty simple. If you're looking at gold intraday wise, let me just hide the pivots so less confusion there. See, with the intraday gold, do we expect a little bit of a pullback? You know, potentially we could be looking at that pullback. So yeah, if you're an intraday trader and you're thinking of, hey, you know what, maybe I want to go short on gold. You know, unlike the Euro USD or the Pound USD, I'm still going to be okay with gold, because if you take a look at this whole scenario here, we did actually cross down below the Ichimoku cloud, and thinking about where we are right now on the hourly time frame, the Ichimoku cloud around 1650 is actually going to be pretty thin, right? So price could actually transition like so. So yeah, do I prefer to go long or do I prefer to go short on gold? I much prefer to go short on gold, right? If hourly closes below 1660, that would be a potential short on gold. Having your stop losses slightly higher, you know, in terms of target level, it really depends, but you can go for 1640 again. Still going to give you a much better risk reward ratio than jumping in long right now, because if you jump in long, that short, if you're thinking of going long right now, your stop loss is going to be here, and in terms of target level, you're probably going to be limited at 1675. Your risk reward ratio is going to be about 1 to 1 compared to 1.5. So yeah, you got two options. Feel free. Right now, don't seem to be too keen on going long. We are expecting a little bit of a pullback on gold intraday wise. Okay, but doesn't change much on my longer term view for gold. We are still within a strong downtrend. Unlike Euro USD, unlike Pound USD, we're not looking at the dollar strength really impacting the gold market significantly at this point in time. We need to sell what exactly? All right, let's take a look at silver. Really haven't taken a look at silver, so this is going to be a blind look on silver. This is going to be on the daily. Let me zoom out a little bit. See if there's anything significant on silver. Range we're still going to be capped by 2050. Yep, that was previous support. Turn resistance at 2050. Still gonna keep an eye on 2050. If you're thinking of going long on silver, we got a little bit of support building up here. As long as this support trend line holds, that's completely okay. Do I see any patterns? No. Do I see any divergences at this point in time? Unfortunately, no. Do I see choppiness in silver? Yes. But if you're asking me on the daily, what should I do with silver? Should I go long or should I go short? The risk reward ratio is actually going to be 1 to 1 or maybe less. It's actually going to be less, right? Unless, you know, you're thinking of having your stop losses pretty close at about 1880. That's reasonable. But let's check on the hourly time frame. Do I expect a little bit of a pullback? Yes. Very similar situation with gold. Actually, we are looking at a very similar. Let me just flip back into gold and you actually look at the Ichimoku cloud here. This is actually very similar, right? In fact, I think it is about the same. So yeah, there we go. So we're looking at a very similar situation here with silver. I don't think silver is that attractive. I haven't actually traded silver since 2013. So yeah, good, close to 10 years now. But hey, everyone has their interests. If you're thinking of silver, not going to be your best guide, but from a technical standpoint, if you're looking for silver, you need to keep a close eye out on 19. If there's no close below 19, then you're still good. But if there's a close below 19, then that's going to shift things up a little bit. Okay. But otherwise, that's going to be there. If price do pull back to 19 on the daily, it will actually be within the Ichimoku cloud, so it'll be interesting to see whether or not it bounces off out of the Ichimoku cloud. Now, if you're thinking maybe should I use the fib? Should I be combining the fibs? I think you should still pull from 25th of October. Taking a look at support, it will be pretty much 78.6 is going to be at 19. So 78.6, 61.8%. If you are short on silver, don't go for an extension. If you're thinking of going short right now, that would be it in terms of target level. You should be aiming for about 1915, maybe 1910. That's pretty much it. 1-to-1 risk to reward ratio. That's what the market's likely going to give you. Otherwise, if you still want to stay within the trend for this, then you do expect price to bounce off this Ichimoku cloud before you jump in long on silver. Okay, I don't have much of a preference on silver. It's not like gold where it's kind of packed with what the FOMC does and stuff like that. It's a little bit unhinged, this one here. It's not really dependent on interest rates. Yep. I think people are talking about a potential, market meltdown next week. So so on the 3rd of November, all right, let me bring it up. I think people are saying the market's going to melt down on the 2nd of November. Let me just put it into perspective. We talk about 3rd of November from the United Kingdoms. Okay, I don't know, for whatever reason, the new Prime Minister decided that they are going to announce their fiscal policy on the 3rd of November, which is the same day the FOMC is going to be hiking interest rates. And then we've got the NFP numbers the next day. So yeah, one of the few good reasons is that I really want to stay away from this week. I think a lot of people actually, if you guys notice what's going on in the market, don't you notice that market was a little bit quiet on Monday, Tuesday, and then it breaks out easily because people are actually sidelined. No, nothing much to actually go against. In terms of volatility, it's actually going to start picking up this week and pretty much a potential meltdown next week. So we've got that. The NFP numbers, in terms of consensus, we don't have the final consensus yet. But really is going to be a tough week next week. So think carefully. It's not that I'm not encouraging you guys to trade. There are times when we actually need to be really careful, and those times in terms of this year, this week and next week, it's pretty damaging. It's not just because the whole FOMC and the NFP in 1 week. That's not a big deal. We've seen that happen. It's not that much of a deal. The UK twist, that gives it much of a bigger deal. Oil, I'm still going to be sidelining on oil. We did talk about oil on Monday. We're going to be picking it up like last year. If you guys didn't know, last year we picked up oil really cheaply around November last year. Are we looking at a potential similar scenario here? Yes. Is it time to pick it up right now? Nope. So yeah, don't rush things on oil. I don't think there's no need to rush for that. For oil to actually pick up, we would actually need to see a little bit of a cross above 90. But that's even on the daily. That could maybe take it closer to mid-November, end of November. If that happens, then it's okay. If it happens too early, then it's not actually going to be great, right? Several key levels to watch out for. We've got 75, 77, but the ultimate support that we have right now is at 70, and the reason why 70, that's the level Biden is actually going to resupply or refill the oil supply in the US at 70. If price goes down to 70, that's when the US is actually going to be buying oil. So that's going to ultimately give an artificial and significant support for oil. Bank of Canada interest rate, does it have anything to do with oil? I'll be honest with you. A lot of people say Canadian dollar and oils are packed and stuff like that, with gold and Aussie packed together. That is actually going to be something that we are going to talk about next week when we talk about market correlation. But I'll give you a heads up. They're no longer really positively correlated anymore. So we it's really old school if we say, Canadian dollar still correlated to oil, gold with Aussie. We just don't see that sense of similarity right now for those. Okay. All right, so that's oil. Let me go through the questions. Euro pound. Euro pound, is it time to sell? Not yet. Okay, so we are at that press. We're pretty much at that borderline right now for even euro pound. So euro USD, euro pound, pound USD, borderlining. I would really just wait for it. No point rushing into it, because if you jump in right now, you got that ECB going on. We still don't know what's going on with the UK and stuff. That's going to be, we've got a little bit more confirmation on next week on the 3rd of November. Give me 1 second, guys. All right, so yeah, don't rush into it. Really, you guys might not like me this week, all right? Being super cautious and stuff like that. There are weeks when we could not give a care about what's going on in the market and just jump in. But right now, I'm just warning you guys, this week and next week, expect a lot of volatility. If you're not going to be holding your position for a longer period of time, so let's say you jump in on the 50-minute time frame, hey, by all means, that's going to be a completely different scenario. All right, go nuts if you want to. So, for example, on the 50 minutes on the euro pound, if you are trading it on a 15-minute time frame, then just wait for a breakout. Simple, easy, right? But if you're not this kind of trader, then I'll be a little bit more cautious. Okay, if you're thinking of trading like that, what are you gonna get? So let's say there's going to be a breakout there. Your short position is there. You could go for 25 pips. And if you like this kind of trades, by all means, it's still there for you. It's not going to matter. Whatever the fundamentals is going to be, wouldn't impact you, because you're probably going to be in the trade for a couple of minutes and you're out within the hour and you're out. But if you want to open a position and you don't want to get dragged on, let's say you trade without stop loss, which I wouldn't recommend. And you don't want to get dragged on by whatever the market is doing, then I would be a little bit more careful, especially on the majors. Even crosses like the euro pound, be a little bit more careful for that. Okay, in terms of the hourly time frame on the euro pound, we are likely going to be going by this fib. We touched down 127.2. Pretty much done and dusted. We could potentially test down towards 161.8, but we could just bounce off 127.2. So if you think of going short right now on the euro pound, might be a little bit too late. If you're thinking of going long on the euro pound, this will be below the Ichimoku cloud. So that kind of takes away the interest for me. The US sentiment seems to be looking down right now. Risk is still on. It's fading out a little bit, right? So if we're comparing risk to the equity market, I think the futures market it's kind of a little bit off. I mean, risk asset still not looking good. Yeah, risk asset, it's as I say, it's kind of borderline, right? It's borderlining right now. We don't know if the dollar index is going to retrace even lower. Is it going to bounce off 111? We don't know if the Euro USD and the Pound USD is going to create a new transition to a potential trend reversal. We are pretty much at that borderline. So whatever you guys learn throughout the webinars, the educational webinars that I've given out, it's basically this week and next week. It's basically time to put it to practice, right? We are at that potential pivot where we could see a new trend develop, or we could see a further continuation. We are pretty much at that 50-50 level right now for this week and next week, so think about it. If you have a buy position or at 80, can you get to 97 as a take profit? I just replied euro pound, so yeah. I'm just going through the questions line by line here, so yeah. So, dollar oil is going to go up to 97. Look, it's potentially yes. Is it going to happen now? Probably not. Am I expecting price to go up to 97? Yes, but is it time to pick it up right now? It's a little bit too early. If you picked it up at 80, you should move should you be moving your stop losses right now? You know, that's another different question as well. Right now, again, as I say, things are pretty much borderlining right now. It's going to be tough. If think about it. If you buy it at 80 and you want to get out at 97, will it get there? Potentially, eventually, yes. Come winter seasonally, there's going to be demand for it. Yes, if the situation in Russia and Ukraine gets worse, energy crisis continues to get worse, is it going to go there? Logically, yes. But if you're asking, if you buy it at 80, is it going to go to 97 without going back to 80? That I don't know, right? Because from a technical standpoint, I do expect price to come back down a little bit. So if you're in profit right now, do you want to scale out? I think that's a good idea. Is it time to scale out? That's a completely different thing right now for oil, right? But hey, you know what? You don't give me a time frame. You don't tell me your stop losses. If you want to put your target at 97, do I see possibilities for it to return to 97? I think eventually, yes. It could potentially return to 97, considering that we are going to be entering winter very, very soon. Demand for oil, for energy is going to pick up again, right? Is it going to drive it up? Yes, it could potentially drive it up. Right. Full cycle. What do I mean by that? So for oil, for example, I would take this as a full cycle. All right. I wouldn't consider this as a full cycle. So yeah, what I mean by a full cycle is that we see price goes below 20 to above 80, comes back down, and comes back down to below 20. That's what I'm looking for right now, if I say a full cycle on stochastics. Yep. All right, one last one for tonight. Let's take a look at Aussie Swiss. I don't even think I have Aussie Swiss in here. Do I have Aussie Swiss? Yeah, I do. Have I ever looked into it? Probably not. All right. Unless you're experienced, I wouldn't touch the Aussie Swiss. But hey, you want me to take a look at the Aussie Swiss? I'll be more than happy to take a look at Aussie Swiss. Key resistances for the Aussie Swiss. 64.20, probably just because of that support there, but I would still be eyeing for the resistances around here. That would put it about 65. Alright, really far off from a daily perspective. We still have got a long way to go towards there. For the Aussie Swiss, I guess it would depend on the Aussie USD itself. So if we do that, we do see price correcting higher on the Aussie USD, then we could potentially see a little bit more of a pullback to the upside for the Aussie Swiss. Is there a potential correction higher? Really hinges. If we do close this above 64 cents, then yeah. Is it worth it? No. So if you're thinking of going long on Aussie Swiss right now, just because it's picking up because of that inflation number, we have that resistance at 65. Risk reward ratio is not going to be great, right? Aiming for 80 pips for a potential risk of 132, no, I don't think that's a great trade. If you're going to be looking at this from an intraday perspective, what should you be looking? Because exotic traders typically are scalpers in the market, right? They're not position traders. I don't know if you're a position trader, but if you are thinking to go short on the Aussie Swiss, could it be time for it? We got this fib. I think we are about 127.2. Pretty much at 127.2. So if the stochastics crosses down, we see price closes below Tenkan, which will take you below 23.6%. Yep. So we need to see a close below 63.80. So I need price close below Tenkan, below 23.6. Then you have your stop loss pretty much like 64.20, 64.25 to target level pretty much like 61.8. That would be your trade if you're thinking of going short. Is it going to be great? No. Again, you're about risking about 1-to-1. So yeah, unless you're really scalping the market, I wouldn't touch the Aussie Swiss. All right. 10. Gut feeling yesterday spike. Be cautious. Thanks for highlighting the upcoming events in early November. Guess it's time for a short break. Yeah, look, I'm not discouraging you from trading. If your trading strategy, if you're trading on a 50-minute time frame, just looking at the hourly time frame max, and you don't really care about the fundamentals, go by the technicals, then yeah, the best strategy this week would be on a breakout strategy. But if you're a position trader or you really care about what's the underlying trend, then I would say be cautious. There's a lot of high impact events. There's a lot of uncertainty this week. That's going to be super volatile. Next week, we don't know if the FOMC is going to be hiking 75. If they hike by 50 basis points, then the US dollar is going to crash. If they hike by 75, nothing much is going to happen. Then it hinges on whatever is going on with the UK in terms of their fiscal policy announcement. And then by the next day, everything could reverse because we've got the employment numbers. We could potentially see a pickup on the unemployment rate, which was at 3.5%. But the unemployment rate that was identified, that was a little bit weird, right? If you are not following the employment numbers in the US, you might not know this. The employment number was up, but it wasn't actually because people are employed by companies. So think about it. Wages are still low. So we don't know what's going to happen here. Okay. So again, a lot of uncertainty going on. If you do care about your trends, if you do care about what's going on in the market, then I would say be cautious this week and the next. If you don't really care, you trade 50 minutes, don't really care what's going on with fundamentals, go nuts. No one's going to stop you. If you trade on the hourly time frame, you don't care about the fundamentals, then just stick with the technicals. I would say breakout strategies. That's going to work pretty well. Okay. So yeah, if you trade on the 4-hourly time frame, you take on the daily time frame, then yeah, it will take 3 to 4 days for it to develop. You can hold your position for, if you're lucky, you would hold it for a day or two. Otherwise it could drag on. Like the position I had with the Euro USD and the Pound USD, it was dragged on for about a month right now. So yeah. Anyway, all out. Just waiting for this week and next week. It'll be interesting. So if you really want to put your technical knowledge to practice, then pay attention to the market this week and next week, because it's going to be quite a decisive moment. It could be a decisive moment in terms of the longer term view of the trend. All right. Okay. So this Friday, we will talk about multiple time frame analysis. So if you're thinking, you're new, you don't know what's going on, which time frame you should look at, we will talk about time frames this week. All right. And then you would probably identify yourself as, an intraday trader, a swing trader, or a position trader. You would probably identify yourself to something this week. So we will talk about multiple time frame analysis. So if you're new, or if you're still, having headaches looking at multiple time frames, then jump in on Friday. Ask your questions, follow through. I'll give you a few examples. Any questions regarding multiple time frames, hit me up on Friday and we'll talk about it. Okay. Other than that, good luck for your trades. Have a great day ahead, and I'll see you soon.